Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. If you hold Bitcoin, you can sell it at any time, day or night, in the United States on Sunday night and in Japan on Monday morning when they're going up in value. This is because you don't have this choice with almost any other asset. The bad news is that the price isn't great for people who are still holding. People who like to buy dips will like it. Although some people think of Bitcoin as a risk-off asset, I don't think of it that way. This means that I don't think its price usually goes up during disasters because it's still not well understood. The biggest problem in banking right now, in my opinion, is that short-termism is like a mental illness. Everybody is interested in what will happen in 12 hours. That's not me being over the top at all. More than half of all the options trades on the stock market are zero-day options. When people wake up in the morning, they bet on what the stock price will be at the end of the day. Yes, that's just crazy. Alden starts by talking about one of the most unique things about Bitcoin, its 24/7 liquidity. Bitcoin can be bought and sold at any time, anywhere in the world, unlike standard assets that can only be bought and sold during market hours. This constant flow of cash is very helpful, especially during times of trouble. For example, if something happens in the financial world on a Sunday night in the US, buyers can still use Bitcoin to get cash. With most other things, that's not possible. But this trade that goes on around the clock also brings price changes. Alden says that this liquidity is good, but the price changes can be rough, especially for people who hold Bitcoin when the price goes down. This instability can be good for people who want to buy on the dip. But she warns people not to think of Bitcoin as a standard risk-off asset. Gold's value usually goes up during crises, but Bitcoin's behavior is trickier and isn't always clear. This video has been liked, subscribed to, and post alerts have been turned on. Please take a moment to do these things. You can also watch our other videos about cryptocurrencies and digital assets in general. Please share your thoughts and comments in the part below. You can help the YouTube Bitcoin bubble in any way you can. Thanks and have fun with the movie. People who work with that portfolio would think of it as a risk-off asset, which means that the price usually goes up during crises because people still don't fully understand it. It's still pretty much the same. There's just sometimes more power in the place. I like to point out that there are cash crises that are good and crises that are bad. Most disasters are anti-liquidity, which means that liquidity is the thing that I found to be most related to Bitcoin. And when there's a crisis, it usually doesn't help liquidity, so Bitcoin will be one of the first things to be sold. This is because, as the saying goes, you sell what you have to, not what you want to. And this is especially true on the weekend when the market is open 24 hours a day. And just an asset that goes up and down, you want Bitcoin to have upward volatility because you want it to get much bigger. But that means there will be times when it goes down. Most of the time, people will treat it like a risk asset until it hits a much larger, more evenly distributed steady state, or at least a size like gold. This is because it has a lot of swings up and down. In a strange way, the American regional bank crisis of 2023 was an example of a crisis that helped create cash. Badly in, say, late February and early March, because that's when funding was actually getting worse. Bitcoin did well, though, when the crisis did happen. That's because the market knew right away that the Fed and Treasury were going to provide cash. When things went wrong, they knew they had to do something about it. They did it. After a few hours, Bitcoin did pretty well. In fact, it did pretty well very quickly. That was an emergency for cash. These are usually events that cause less liquidity, like the COVID crash or this shift we just saw. That's why we shouldn't think Bitcoin will do very well during those times. It still does its job of giving people cash 24 hours a day, 7 days a week if they need or want it. But I think it's more like, and Parker Lewis may have said this, it's not a fence. It's a solution because it's an alternative system that's being thought of. Think of Bitcoin in terms of anything less than 4 years because it's a structural growth story that will likely be sold during most negative liquidity crises, as long as the thesis is right. You buy a solution for something like if money is broken, you buy the least broken money, the good money, and try to make processes. What do you think about this recent drop in the price of Bitcoin, they ask me? What I'd say is, I keep keys in places that are geographically different. I invest in venture capital with ego dev capital, with plans to hold on to the money for 10 years. That's how long I have in mind when I think about Bitcoin. When it comes to the medium term, I usually tell people that Bitcoin is very dependent on liquidity and doesn't do well when liquidity is low. If we do get this more gradual rotation, like if the US lowers interest rates because of slowing economic growth, emerging markets will start to come back to life because their dollar diamond debts will be a little less stressful. This will start a flywheel effect where investors say, oh, they're doing okay, I can take some money out of overvalued US stocks and put it into country XYZ's, which in turn makes their currency stronger and the dollar weaker, which is good for their dollar diamond debts. Is he getting a self-reinforcing flywheel? If so, that sounds like a pretty good place for Bitcoin. In that case, foreign stocks would be doing pretty well because they would be doing pretty well on Bitcoins. This is where it would likely be paying off pretty well. You should know that over the last few years, Bitcoin has been even better in yen terms than it was in dollars. You should know that if you're Japanese and you have Bitcoin, you're like a king or queen. You could have the same thing that most people around you are having if we get that other type of shift. Since the time frame is so short, I think Bitcoin will go up a lot. I say it's okay for maybe 2 years. I think Bitcoin will go up over the next 2 years. But I'm more realistic. I look ahead a few years and say, I think global liquidity will be higher in a few years. I think Bitcoins can be higher. I don't think it will be a risk-off play in terms of price though, unless there is one of those rare pro-liquidity disasters. Anthony Pompliano talks about the ongoing inflationary forces and what central banks, especially the Federal Reserve, are doing to deal with them. He says that the Federal Reserve's practices of meddling have made interest rates and the money supply behave in ways that are not natural. This has messed up the market, causing things like the huge inflation we've seen. He thinks that the Federal Reserve has set off a cycle of overcorrection by first letting inflation get too high and then making it so hard to borrow money that something in the market broke. There are a lot of effects from these laws. Pompliano says that the tightening of financial conditions has caused asset prices to drop by a lot, especially in the tech sector. He talks about the big drops in stocks like AMD and says that these kinds of moves often mean there are bigger problems in the economy. He says that these changes in prices are part of a larger trend in the markets towards short-term thought. It was bad strategy for the Fed to get involved in the market when it was first set up, right? In a market, you should let the free market do its thing. It is cocky of people to think that they can control the market better than the free market forces. So in the end, what the Fed is doing in 2020 and 2021 is deliberately keeping interest rates low in some situations. They are also illegally increasing the amount of money in circulation at a rate that doesn't make sense. So what do you get? You get a lot of inflation, right? The real goal is supposed to be 4 times the stated number, right? That is almost 5 times the real goal. The trouble now is that we are artificially raising interest rates, and at the same time, at least from the Fed's point of view, we are trying to deflate or slow down any kind of economic easing. They still printed a lot of money, which is why their coworkers didn't get the message. After all, the debt is over $35 trillion. But I do believe that interference is the first mistake in policy. The second mistake they made was that they over-rotated and didn't do anything before inflation really hit. They have now over-rotated the other way too, and they have kept the money tight enough that they will keep doing it until something breaks. This seems like it would be something breaking, right? There has been a drop in the Japanese stock market this big since 1987. When you look at these stocks in the US, I think AMD is 40% below its most recent high point. How many drops do tech stocks have to take before people say, you know what, this is likely something we should look at? I would put those things in the false signals bucket. That's because people only stop going to Broadway when they hear there's a famine. Most people don't pay attention to the news that there's a recession. They only stop traveling when they hear it. They just go about their business. They've been told for 4 or 5 years that you're getting richer. In the end, they keep believing that they are rich. They think they have more and more money, right? So they keep spending money over and over again. There are some who do it on credit, but most of them don't. So when you see that, that stuff would dry up quickly if people all of a sudden said, we're in a recession, and there's this very interesting debate about whether the change in behavior is a sign that we're in a recession, or whether it's just the way people think and act. People are told they are in a slump, and I think it's more the change in my mind. When people are told something bad is coming or is already here, they change how they buy things. This is clear from the Psalm rule. It became very scary for everyone. Then I saw Claudia Psalm, who came up with the metric system. She said on CNBC, I think it's a false positive. In fact, these are the reasons why. No.